Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 23rd, 2017. I'm Franco Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You can see that price pushed through the 2351 half key level, held above the previous session's midpoint, and continues to hold here at the moment at these highs. I mentioned before this has been a very bullish advance after the recent sideways movement here, and typically speaking, at the moment we're not seeing much more than a one-day pullback. We're not even seeing much of a pullback at all. Instead, we're seeing more holding patterns where price will rally and then go sideways, rally and go sideways. And right now that shows how strong the market is. So again, even should price push below the previous session's low into 2351 half, it may be an opportunity again to defend for another shot at continuing higher. As I mentioned before, there's still a major target, the last major target on the board. 2376 half is the next one up. That can certainly be reached this week given the current average weekly range. So again, 2351 half is the key pivot on a swing basis for a continuation. But even if we dip down, here's the pivot range. That's still an opportunity to defend for a continuation to new highs. So far, still trending upward. Pullbacks to be defended. Here's a look at the higher time frame, rather the intraday time frame. You can see that we've basically gone sideways in a very tight range. So after you see a price discovery phase, you tend to see a phase of compression where balance is then created. Bulls defend one side, bears defend the opposite side, and right now we're tightly coiled. So at some point we should be looking for expansion, but right here in the center part of this range is not really where you want to do business. Currently speaking, you want to be at the edge of the range. So back toward 2355, should price get into this area, that's where bulls want to defend. If bears want to engage, they want to engage somewhere between 2364, 2365 for a shot at pushing this thing back down. But the current upside bias is to the upside, obviously, so defending pullbacks as a buyer is a much better option right now. You have to be much more disciplined and risk averse if you're going to defend the top end of the range, because at some point we know that the break is ultimately going to lead, or likely to lead, to the upside into that 2376 half that we still have on the board. All right, let's take a look here at crude oil. Here's a look at crude. Here's the higher time frame for crude. One thing that stands out about crude here is how the previous session rejected here. So we had the rejection at 55, and then price drops down, rejects, and comes back up. And now what we're seeing is a pullback right into the zone here, 54 half, 54.40, right into the area that has been highly defended and rejected already many times. And so after this major rejection here, after yesterday's rejection here, we're back into that zone now. So the idea here is, does price find acceptance beyond 54.50? If not, we could be looking at another continuation back down. So if you recall, this is the range at the moment. 54s, 50 down to about 51s. Rejections here tend to lead to rejections back across the range. So right now, this move in the 54.50, 54.40 early in the day could be an opportunity to reject prices and push them back down toward lows. Otherwise, acceptance above 54.50 could open up a retest back toward 55s. This was a major rejection point intraday, so it would be hard to find rejection through that point right now, but if it happened, it would be significant. So let's look at the intraday time frame here. On an intraday basis, again, all we have is the edge of the larger trading range to play off of. And here's the look at 55s. It hit it one time and rejected hard. Got all the way back toward 53.30. So a major rejection. We did see price hold off of our 53.40 key level, which is our intraday key level, held there, formed an absorption signature, and bounced. But one level to watch here, obviously, is going to be this level right there. That's 53.30, that level right there. And that's kind of where we are right now. 54.50 is the other level up here. And so right now, this is kind of the zone here. Our bear's going to come in and defend and push this thing back to value. or do we see a continuation for a retest of 55s? Not an easy question right now, but given the current upward flow, pullbacks are currently being defended by bulls for a continuation higher. So short term, the trend is up. You see this LVN here at 54.23. That's also where the VWAP is. So right now, that's the short-term area to defend for a continuation higher. Failure to hold that area opens up a rejection and a retracement back toward 53.87. All right, let's take a look at ZB. Here's a higher time frame look at ZB. This one showed a bit of strength the previous session here. Obviously, we had these lows that were defended again right on the midpoint. But up here, when price got above the previous week's high, there was no acceptance at that point, and we saw price rotate back down toward 151.11. At the moment, we're seeing some tightly coiled price action in the zone, but that's not uncharacteristic to the current personality of this market. Here's the rejection, and we're starting to see some absorption. That's very similar to here, where we saw some absorption, back and forth action. Very similar to here when we saw it. So this market here tends to get kind of back and forth here. Again, the opposite end of the range here, 150.18 to 150.20. That's the zone where bulls are defending. Bears on the top end of the zone, 151.30. But the flow overall is to the upside until we get to 153.21. So right now, defending pullbacks is a better option at this time. But if you look at the intraday time frame, it's a little more tightly coiled at the moment. Here's a look at the intraday time frame. We'll go to a 233 tick chart. And if you look at the last several days here, you can see a trading range that is formed. So right now, the opposite end of the range, again, 150.18 to 150.20, right in that zone. That's where bulls want to be stationed, defending on that area for every rotation. So should price pull back to that zone, it's a defense opportunity. On the top end of the zone is up here, 150.30, 152s. Right in that area is about the zone where bears are defending. But overall, the trend is to the upside. But that's the current range, and we'll likely see further development within this range here in the near term ahead of a potential upside break and continuation toward 153.20s. All right, let's take a look here at DX. Now, the previous session here, I mentioned that we were getting a retest of recent highs and that retest could be rejected. And I mentioned that a push beyond the previous highs would be ideal. So if price would have pushed up here, this was ideal for a continuation back down. But price didn't do that. It got right into the 101.65 to 101.75 zone and was rejected from there. And here, so far, pre-market, we've seen a rejection off the midpoint of the previous session's rejection day. So that's pretty important. That's an important key level to watch right there for the day, and that's 101.43.5. So that's important short-term resistance right now. Short-term support, 101.11s. And so that's kind of the range that we have at the moment. Failure to hold support here could continue this thing back toward the 101.5s, which is the midpoint of the key range. But again, as I mentioned, any push into this zone will still look to be defended by bears. So if we take a look here at the intraday time frame for DX, you'll notice here again, here's the push into the 101.65 zone, the 101.75 zone. Here, rejected. Over here, lower high, rejected. Right there is where they had 101.60 is where they had some absorption, push downward. Lower highs at the pivot range for the day, and again, a push downward. So at the moment, this thing is kind of sloping a little bit downward, but this is the bottom end of the range. So that's the current range to watch, 101.65 to 101.75, and then right here, 101.10. Bulls want to look to defend here for a push back up. Bears want to defend here. As soon as we fail to hold 101.7, basically, you likely get a retracement all the way back toward recent support at 140, and that would be another area to defend for a push back toward 101. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.